Good evening. Ira Epstein, and here we are on Wednesday, September 17th, 2025, with your SPDR ETF stock market wrap-up. And this wrap-up is for Fed Day, and it is Fed Day. Wow, interesting. Now, this morning, I wasn't getting quotes for Monday and Tuesday. It's the strangest thing. We use a major quote vendor, and somehow they were missing. Right after the close, they put everything in, so I'm able to come back with you and talk about the markets. So the big event today was the Fed, and the Fed cut a quarter point. Gee, I went on the line 2 weeks ago, started saying, unless we got those CPI, PPIs to come in cracking down, not going up as the CPI number did, I don't think you were going to go for 50 basis points. You got the 25. There was one vote for the 50, and you know it had to be Stephen Moran. The consensus vote was 11-1, so that's pretty darn good. Now, how many cuts are we looking for? Well, if you looked at the dot plot, and I cover all this in my update tonight for my written full research people, they are still looking for another 2 cuts right now. So, in other words, 3 cuts this year, going into next year, maybe 1 or 2 cuts, and maybe the year after 1. So, are these the first ones? Well, no. You do remember a year ago, we did a series of cuts too. So this is the new cycle that we're getting. And when you get the new cycle, typically what happens is when you start cutting rates, the day of the announcement, it gets pretty crazy. You've got to be careful of the yin-yang effect. When the Fed does this at 1 o'clock and then the press conference at 1:30 and whatever he says moves the market. And by the way, up until the press conference, the stock market was rallying. Bonds, the 10-year note went under 4%, and everything reversed course late in the day. And you came back and you were down, as you can see, in the S&P, barely higher in RSP, lower in QQQ, a little bit higher in IWM. So what I'm getting at is the markets reversed on you as Fed Chair Powell was talking, and you just got to take it in. You can get another set of reversals when Asia opens tonight, because people do go to sleep. They'll take their take on it. That'll move to Europe when you and I are asleep, and I will sleep tonight. And then it'll come back to us, and we'll see what we actually have. So this is very typical the day after the pros realize that, and you should realize it too. The next thing I want you to look at is tomorrow you're going to get jobless claims. They're going to be an important number. The market was taken back by how big they were. Now they're looking for 23,000 down from last week. We'll see if they get that. If they don't, it just tells you how much weaker the labor market is. The market will look at that as another reason for the cut that is going to ideally come at the next meeting, and that might be a little bullish for the stock market. We'll find out. The Philly Fed Regional Business Activity Index at 7:30. The Conference Board, August, leading, coincident, and lagging economic indicators come out tomorrow. You know you're getting a lot of companies that are coming out with IPOs. It's like every day we're getting one right now. Look for that. And we're looking for energy analysts forecasting a build of 76 billion cubic feet in the latest reporting period. And that would compare to 56 billion that we had the last time, with an average of 74. So getting into that normal amount. Nothing there that I'm too worried about one way or the other. So as we come back to these markets and we look at things, the bonds lost their bid. Amazon, which started off really well, got to 230, 430, was actually lower. I like what Netflix is doing. Remember, we were just talking here that I think that the 1180 area is now important. But to me, the 1223 level on the weekly chart and the daily seems to be a big pivot number that I'm looking at. On Apple, you held up with an 84-cent gain. Home Depot, which has been rallying with the idea that interest rates would help the stock, got hit pretty good today. I was just watching RH, them getting hit. I was thinking RL in my head because I was watching Kramer tonight, and he's all bullish on Ralph Lauren. RH's Restoration Hardware still getting hit. Google getting hit one more time. Google has been a big positive story, as you probably know. Tesla came up again today, $4, but the metal markets gave back a big chunk of what they've been making, so you got to pay attention. We're talking Rocket Mortgage here. And going into it, I said, I don't see why they wouldn't rally, given that everything based on mortgages has been coming down. Now, because the 10-year note got under 4% today and then rallied back to 4.08, 4.085, I think was the close, it trimmed back the gains here in the market. The markets went crazy when they saw under 4% briefly. When I say briefly, if you weren't watching it, you didn't know what was happening. In terms of the pattern, higher high, lower low on the swing line. You're over the 18-day average, so I still have a bullish bias in the market. It stopped the rally at the upper Bollinger Band. I know it gets up there and people get all crazy. It's breaking out. No, it's not. It typically gets thrown back. I can use the word typically. Nothing's 100% of the time. But if you go and you look and you buy that upper Bollinger Band, I think you can do better things with your fortunes than doing that. That's the point that I'm making. The market gives you a better entry point. You're still in an overbought market. So if you're like me, you know, I was not the greatest pilot in the world, but I was certainly a pilot. And in doing so, you don't take off and then you do your checklist. Before you make a trade, it's the same thing. When I see an overbought market near a Bollinger Band, I go, I'll let you own it. I don't want my clients to own that. We wait for a better setup for ourselves. In Oklo, it's still bullish. It's into the Bollinger Band. It's trying to embed. When a market hits a Bollinger Band almost every day after 3 or 4, we call that a gorilla glue trade. And what it does is it pushes the band and it forces the momentum in the slow stochastic to come up. Now, generally, they coincide and embeds. And until the red line closes under 79, once it's finished embedding, it's a buy on the brakes. We're trying to get that done. I'm still sticking with my argument on Netflix. I like the stock down here. It's not yet a buy. It's certainly not a short sale. It's just sort of hanging in midpoint here, waiting to tell us what to do, which it hasn't yet done. In United Healthcare, now that you lost the bullish embedded reading, this is that situation. I was leading you into this intentionally. Here's the market embedded. All the numbers are going, both numbers over 80. By the way, mine will be different than yours. So if you're trying to figure out why yours don't match mine, it's because I changed the formula. Not is it going to use a certain percentage. It's inside the formula. But to make a long story, and I did that with the help of George Linn, who was the founder of Slow Stochastics. And I showed him what I had come up with, and he always told me, that's interesting. Well, in any case, looking at the market, when you lose the embedded reading, the odds are before you go up for the most recent high that you're going to make a run at the closest main moving average. In this case, the 18-day average. Excuse me here. It'll change on you each day, all right? Because as the market goes on, that's where you're coming. And that's how you finish today. I still think it'll go to this number before it makes a new high. Doesn't mean that I'm bearish. It means that overall I have a bullish bias because you're over the market. I'm looking for a better entry point. In Home Depot, the first thing I teach is you're not buying Bollinger Bands. Second thing, if it's embedded, you can be a buyer, but there's a set of rules with it, and each one of these had a higher high day. I'm not going to teach you my rules, but that's part of it. And now the market acts like it too wants to come back to the 18-day average to fight a battle, and that's where I expect the market to make the battleground. Now, could it give up a lot of ground here? This is a stock that was just $350 roughly. It went up $75. That's a heck of a rally. That doesn't mean it has to give back a big chunk of it, but at a minimum, I think it's coming back here. I'll throw in my towel and say I'm not right if you take out today's high on either Thursday or Friday. Robinhood, overbought. I'd rather wait and see if it can come back to you. In Tesla, it just doesn't stop. It just keeps going up here. And I guess when you have $1 billion and you buy more of your shares, the market just keeps moving with you on it. Joby. I think Joby's now forming its base. I think it's right here. Could I be wrong? Of course I could. Is it a buy signal here? It's got the first steps of it, yes. The market's got the higher lows, higher highs. It's not overbought. So until this low's taken out, I think the pros are stepping in and nibbling at the 1390 level. I think they'll get courage. that if you can come out of this narrow Bollinger Band, the narrower it gets, the more bullish I'm going to get on it. If it breaks out through 1523, it could be on a breakout trade. In XLF, back up, and you would think that if interest rates are coming down, it's going to help these financials, and it went back to the Bollinger Band. Notice how it stops magically at that number. Just pay attention to that. In XLI, well, this was a big failure day for industry. It just came down with an outside day to the downside, but it's basically still stuck in this whole sideways action pattern, and I run away from these patterns. I don't look at them as opportunity. I run away because my life has been one where you're trying to buy, hoping it'll break out, it doesn't. You're trying to sell, hoping it'll break out, it doesn't. And it just wears you out. Excuse me there. In the energy, they're still looking bullish. Higher lows, higher highs. Lower interest rates is helpful for energy consumption. It has nothing at all to do in XLE with anything about that in reality. It's the refineries and other things you want to look at. In the gold market, okay, an embedded reading that had an outside day down. When you get an outside day reversal to the downside, coming in at the highest high that the market's recently made, it's called a key reversal. Until that high is penetrated, you assume a trading top is being made in the market. It doesn't have to break the uptrend, but it is a top of sorts, and it is not an area that I'm aggressively saying you get involved. I watch this and see how deep it can break. There's another key average I don't show here, and that's the one I'll be looking at. Silver, the same thing or not? Yes, silver here kept the embedded reading. In the futures market, you got to look and see if it kept it there. I'll share that with you in my futures tape. In the copper, pulling back down. Now, if you lose these embedded readings before you go up for higher highs, I would expect that we go into a period of spinning our wheels and seeing if price and the 18-day average in the metals can come together if they lose their embedded readings. BND, key reversal down. You wouldn't think that on a day that you're getting that cut, but here it is. Now, I pay attention to that instantly. Again, it's a key reversal. If you take out that high on Thursday or Friday, then it was just a false signal. But that could mean we're going to go into a pause period here if, and you haven't, if the red line closes under 79, it portends a problem where the interest rates want to climb a little bit. You tried 2 days under the Bollinger Band in the dollar. You couldn't stay there. You got up to a new high of 109.89 and came back under the Bollinger Band in FXE. I wish I could say I'm surprised. I'm not. So if you want to join us in the morning, because it's going to be exciting when we get the morning futures going, because there's going to be a lot of trades coming in the futures and in the SPDR ETF at 9 o'clock. I'll record these. Join me. Go to IraEpstein.com, the word research, that's where you do that. You'll see a cursor up here, give it a click, and away you go. With that, I'm Ira. You have yourself a great evening. Watch me in the other videos, and I'll see you in the morning flash update as well. Take care.